Thursday, December 15th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at how the gold rush is just starting, and it's from Cairo to Vienna. It's global, and yes, we're going to look at that today. Before we start, we're going to go through some of the questions from last week. We've done 4 questions so far the other day, a few days ago. We didn't do questions yesterday, but we're going to start with number 5 from Louise, and it's from the like with Rome, inflation is bringing down the West. He says, how much percentage of gold should you hold? Well, it depends on the individual circumstance, where the individual lives, his financial situation. But I would say you have to look at gold, Louise, as savings. So how much would you save? That's what I would think of when I try to decide that. I never try to tell people how much gold to have. So number 6, how do you peg oil to gold without remaining linked to the US dollar? What is gold worth to buy oil if gold valuation is based upon gold metal not connecting to any country currency? Will there be an exchange that barters only gold metal weight offered for oil, no paper currency involved? What is the name of the exchange, or how is this process accomplished? I wonder if Bitcoin could be pegged to gold. How is that done absent using any country's currencies or currency? Well, that's from John Sherman, and it's from the video Zotan says Russia could peg oil to gold to circumvent price cap. Well, as Rafi Faber says, the paper dollar or the Federal Reserve note is only a substitute for gold. Gold used to be money and currency before 1933 in the US, so it doesn't have to have any relationship to the dollar, this pegging of oil to gold. I think all the Russians need to do is say, if you want a barrel of oil, we're going to have to pay 1 gram of gold, or if you want 2 barrels, you're going to have to pay 1 gram. As to the exchange that the buyers of oil could exchange their gold for oil, well, it could be done through through the Central Bank of Russia. It could be done through the Moscow Gold Exchange. The Russians have said in the last 6 months or so that they want to have a Moscow world standard, like a kind of a competition to the LBMA. So they could pay they could get paid directly in gold for the oil. They don't have to use any country's currencies. It would be just like a normal transaction. So yeah, it's the Moscow world standard. And yeah, of course, Bitcoin could be pegged to gold. Definitely. Yeah, they could peg Bitcoin to a gram of gold. And you have to realize that gold is always a fixed weight, and it's always a constant because it's money as well. And how many Bitcoins or Satoshis you would get would fluctuate, of course, just like how many barrels of oil you could get for a gram. Number 7 is from the Zoltan video as well. So what would happen to the price of gold if there were an oversupply of oil caused by a global recession as per the sub-zero price reached in 2020? The Life of All Jules asks. Well, the price of gold, there is no price of gold when you're pegging oil to the gram of gold. It's all how many barrels of oil you can get per 1 gram. So you need to understand that gold is money. So there wouldn't be any price. It would be just a ratio between the gram of gold and oil. And could oil goes sub-zero again. Well, that was back in May 2020. That was like a freak event, and it only happened in the West Texas contract, mainly because there's no room for storage in Cushing, Oklahoma. So people who were holding oil for delivery, they couldn't store it. So, and it costs more for them to hold the oil than to just sell it, even for a loss. So that's what they did. It was just something that happened, but it didn't happen to Brent crude. So that's my answer to that one. Number 8 is Zoltan video still. Great video, thank you. Do you think the Middle East will have the same idea? That's from John Jeffries. They could, even though we saw, I think it was last week when Xi Jinping met the Saudis in Riyadh. He said that they're going to start buying oil with yuan from the Gulf countries, the Persian Gulf countries. Yeah, so they could do what the Russians doing, but they could also do buy it or sell it in yuan, and they could take those yuans and go to the Shanghai International Metal Exchange and exchange that for gold, the yuan for gold. So indirectly they could do that. Whether they will peg it to gold, they could. If the Russians do it, then maybe the whole of OPEC will do it. Number 9, will the CBDC bring deflation? Craig Mitchell, it's the Zoltan video again. I don't think so. I don't think so. Any currency created by man, fiat currency that is, because it would be a fiat currency, usually inflates away right from the get-go. So that's my answer to that one. And the final question here, number 10. If cash becomes zero, will collectible coins go up? Craig Mitchell. That's from the Zoltan video as well. I assume he means collectible gold and silver coins. Of course, they will go up. Back in 1980, when gold and silver had their huge move up from like 35 to almost 900 in gold, and from like below $2 to like $50 in 1980, there was something called the big melt. A lot of the collectible coins were sold to melt because they were worth a lot. That's the sad thing. If you do have a currency collapse, you could see a lot of collectibles be melted because people will sell them because they will be worth not just the collectible price, but they will be worth a lot in just the silver content. We'll answer some more tomorrow. Before I go on to the gold rush story, over the years, many of you have asked me, where can I buy gold and silver? And with that, I've affiliated myself with a few precious metals dealer here in the UK, Gold Investments. The promo code there is Monaco64. Details are below in the description. And in North America, more recently, I've affiliated myself with Miles Franklin and Andy Schechtman. Details below in the description. And also ITM Trading and Lynette Zhang. So if you've never bought gold or silver before, I think these 3 affiliates could help you. You can just contact them and tell them I sent you there. And even for those who have bought gold and silver, you might get a better deal for that from them. But of course, as I've always told people, you need to shop around. Back to the main topic of this video, the gold rush from Cairo to Vienna. Yes, I saw this story here a few days ago. Egypt, gold buying mania as national currency loses value. Many want to protect their savings by hoarding gold, but that has led to an exponential rise in the price of the metal, making it off limits for other consumers. So what you'll notice with articles about gold, and this is from the Middle East Eye, and I assume it's a quite mainstream publication, is that they're always trying to discourage people from getting into gold. So I'll do a summary of this article here. Basically, the reason why Egyptians are buying gold is that their currency is becoming worthless. They've had to devalue the Egyptian pound a couple of times this year. And the other thing that happens in these countries that are not part of the club and then can't get their currency supported, like the British pound and others, through swaps with the Federal Reserve, is that they have a dual exchange rate. The official bank rate, which is basically the manipulated rate, I would say. It's not the real market rate. And then you have what this article calls the parallel rate. And I remember in Brazil, we had a parallel rate, or it's also called the black market rate, i.e. you need a lot more Egyptian pounds to buy $1. So what they're saying here is that the price of gold is artificially high because of this parallel rate, because the retail person is buying jewelry and using the parallel market, and it makes the Egyptian pound look a lot weaker and makes gold look a lot better. And I would say that this gold rush is not like, let's say, the gold rush we had from 2002 to 2011. No, this is a gold rush based on fear back from 02 to 11. Yes, there was the '08 crisis, but things were pretty smooth in terms of currencies. I think this is based on fear, and this is why Egyptians are running away from their currency. But just to give you an idea here, how they try to how can I say, discourage the public from protecting themselves. It says at the end, it is better for people with savings to avoid buying gold now until the current high price wave comes to an end, Abdel Muttaleb said. There's a lack of clarity on gold pricing policies in the local market, while traders show no abidance by the official exchange rate of the US dollar. Yeah, so they're always going to discourage people, and they're also saying how it's unfair because they're hurting people who want to get married and they want to buy wedding rings and stuff. So it's bad. You're buying gold, you're hurting other people. Anyway, yeah, it's from Cairo to Vienna, as I said. So yesterday, this came out on Reuters, and don't worry, Reuters denigrated gold as well, as you see here. So inflation, uncertainty fuel new gold rush at ancient Austrian mint. So let's go through this article as quickly as possible. And again, I'll put it below in the description. Austrian mint, one of the world's oldest and biggest producers of gold bullion coins, is unable to keep up with demand as people rush to find a safe haven for their money amid surging inflation and economic fears caused by war in Ukraine. Again, I think this is a currency crisis. This is going to be driven by fear. And ignore the COMEX and the paper price, I would say. Demand for gold has never been as high as this year. The Mint's chief executive Gerhard Starczyk told Reuters in his ornate office in a Vienna building where coins have been struck since the 1830s. Behind its quiet facade lies a warren of workshops where modern machines melt metals and thump out money. Yes. Notice how they actually said the truth there. It thumps out money, gold and silver coins. At the moment, every gold coin that comes off the coining press has already been sold, said Starczyk. Right now, we could sell 3 times as many as we are able to produce. Why don't they? Probably because the central bank, which owns the mint, is telling them not to buy too much because they don't want the price to go through the roof, even though you could argue Austria is a small country, but it's a very popular mint, though, as you'll see in a minute. The mint shop, a modern corner of the building, has had a long queue outside daily for months. Among those standing in line was pensioner Renata, one of the few willing to talk about her purchasing habits. And this is what she said, Renata. I'm from an older generation. Whenever things get a bit uncertain, we come back to gold coins and tell ourselves we'll always be able to sell them. She said, gold has that safety factor. I think she's got a lot more sense, this pensioner, than many economists, mainstream economists. Starsick said customers were of all ages and from all walks of life. Around a third of the mint sales are to foreign buyers. The mint, this is an interesting part here. The mint was founded in 1194 to strike coins from the silver paid as a ransom for Richard the Lionheart after he had been seized and held captive by enemies near Vienna. Today, the mint says it's one ounce Philharmonic gold coin named after the world famous Vienna Philharmonic Orchestra is the top selling gold bullion coin in Europe and Japan. So there you go, Europe and Japan. Yeah, notice how Reuters calls people who buy gold hoarders. Austria is a financially conservative country in which the public hoards cash and gold in times of crisis. The mint says demand for gold is the highest it has been since it took on its current form in 1989. So I'm going to stop right here. You get the idea of what's going on in Austria, right? And you can read the whole article. At the end, though, this is what whoever wrote this article for Reuters, let's see who it is, Francois Murphy. This is what he says. He said he believed more Austrians were seeking to include gold in their portfolios as a hedge against stocks or to diversify their portfolios. He was like, he's talking about the head of the mint there, Starsick. But this is the last sentence of the article, and this is what this Francois Murphy says. Many analysts doubt the usefulness of gold to counter inflation, however. So there you go. Reuters, Reuters is, I think, associated or was many years ago with the Rothschilds. They are linked to also to the FX market. So it's not surprising that they've denigrated gold there at the end. So they put these articles there, saying, yes, people are buying a lot of gold, the most ever since 1989. These coins are popular all over the world. But at the end, they say there's no usefulness to buying gold, even though at current prices, especially in Europe, gold is up on the year. Stocks are down, while in the US as well, stocks are massively lower and gold is almost unchanged, and silver up until yesterday was up on the year. So there you go. Now let's quickly look at the markets. This morning, we had the Fed, of course, yesterday, and they raised by 50 basis points as expected. And they're quite hawkish, and so was Powell. I didn't watch the press conference. But one thing I would say, stock market didn't do very well, not particularly well, but I was very encouraged by how gold and silver closed around 5 p.m. New York time. That's when the futures halt for an hour. Gold was above 1800 and silver was almost at 24. And I thought that was a very good price action for gold and silver. But if you look at it this morning, though, I think someone didn't like that. So they've bashed gold and silver for no reason whatsoever. I would have said in the normal market, with the sentiment and the price action of yesterday, gold and silver should have been higher this morning. But no, the paper price is lower. We've got gold down $25. So why do they do that? Well, I think it's because people at the Fed yesterday, after the dust settled, markets closed, they looked at the markets and said, wow, we need to do something about gold and silver. Look at where they are. They're near the highs of the year. They didn't even go down after the decision in the press conference. So what do? Well, right off the bat, when it reopens at 6 p.m. New York, you probably get JP Morgan New York, all those suspects smashing the futures price, and it's it's relatively liquid at that time, and they continue throughout the evening and in the morning in London. So that's what's going on. Has that changed my view of gold? No, because I think the Egyptians and the Austrians and all other people across the world who are buying gold, because that Reuters article says it's a global phenomenon, not just Cairo and Vienna. They're going to continue to buy the real thing, and they're going to overwhelm these central banksters, in my opinion. And yeah, so right now it's 8:20 a.m. London. Gold is down $26 for no reason whatsoever. It's at 1780. High has been 1809, and the low is right here. Silver, which was up yesterday actually, and was settled around 23.92, is now at 23.02 for no particular reason either, down 90 cents. The low is right here around 23.00, and the high, of course, they stopped it from going to 24. The high is just around 24. Stock market is down. Dow futures is down 0.5%. Nasdaq is down 1%. The S&P 500 is down 0.75%. The FTSE is down almost 1%. To the currencies, and of course today the Bank of England and the ECB are expected to raise rates by 50 basis points. Bank of England comes out at midday London, and then the ECB I think comes out in the afternoon at 1:15. I think they've moved. Yeah, they're coming out at 1:15. Usually they come out a little earlier, but I think they have an ECB summit today. But yeah, the pound is down about 0.5%, 123.60. The euro is down 0.5% at 106.33, and the dollar is up 0.5% versus the yen. How about the other currencies? Yeah, they're down as well. Aussie dollar is down about 1%, just below 68. Dollar is up 0.2 versus the Canadian, 135.70. Kiwi dollar is down 0.75 at 64.07. To the general commodities, we'll look at platinum here. Platinum is down as well, $25, just above 1,000, around 1,008, I would say, down 2.4%. WTI crude is down just under 1%, 76.55. Brent is down 0.7% at 82. High grade copper, that's down 1.8% at 380. And US nat gas, that's up 0.5% at 633. Let's quickly look at the Dutch nat gas futures. That's up 1.4% at 133. And to finish off, the 10-year yield, that's at 350. That's unchanged. The 2-year yield is down 1.5 basis points at 4.24. So there you go. If you enjoyed this video, make sure you hit the like button. And with that, I wish you all a great day. Take care. Bye.